Bullion is one thing and the stocks are quite a different thing. And, when people say, well, would you be willing to buy gold at $5,000? And I say, well, bullion, sure. I don't really care what the current gold dollar exchange rate is. Bullion is savings. It's not a speculation. I don't buy it because I think it's going higher. As our friend Rick Rule likes to say, I buy it because I'm afraid it's going to 10,000 or whatever. And the time to buy insurance is not after the catastrophe strikes, it's before. And if you see catastrophe coming, you're not too worried about the cost of the insurance. You just want to make sure you've got it before the disaster hits. So that's the way I think about bullion. That includes silver, of course. If I have savings that I want to put away for the long term, then I accumulate. And of course, I don't try to do that on an up day. I try to buy the dips and so on. But yeah, I'm happy to do that. Basically, that's a constant for me, not a variable. The stocks, on the other hand, they add leverage. So if we're in a period of correction and consolidation, it is reasonable to expect there to be buying opportunities. And so, no, I'm not doing that today. In fact, not entirely, but I'm pretty much on hold in terms of buying gold and silver stocks, because despite the big corrections we've seen, the better companies, they're doing fine. Many of them are at all-time highs or pretty darn near all-time highs. It's striking to see this, particularly in the silver space. You'd think, oh, it fell, it crashed from 120 down to 70. Whatever shall we do? Well, but the mines were built with the idea of sub $20 silver. So 70 is a phenomenal price for the actual business of mining this stuff. And I think that investors, at least people who've been around the block, they know this. And so the silver stocks, the better silver stocks, many of them, just yesterday, last I looked, if they weren't at their all-time highs, a little wiggle at the top of the right of the chart, it was de minimis. So I'm not complaining. I'm not saying that's bad. I'm long. I'm happy to see my portfolio benefiting from this. But as a buyer, my idea is not my original idea, but the idea is buy low, sell high, not buy high and hope to sell higher. And again, bullion, completely different thing. I think high, low doesn't matter. I'm always accumulating whenever I can. For the stocks, I want to buy low. Well, first, obviously, we've seen major margin expansion. And sure, costs go up too, inputs go up, but particularly with energy costs being down, which is such a huge part of it. It takes a uniquely incompetent management team, or perhaps even a criminal management team, not to make money, especially in the gold and silver space right now. If you're a miner and you're losing money now, there's something deeply wrong with your company. And dear shareholders out there, investors, if you've got some favorite company and it just can't deliver to the bottom line now in this market, you really need to ask yourself if that stock should be in your portfolio.
Lobo Tigre says, metals narrative unchanged, debasement trade still on. Central banks still buying bullion. Is savings, buy dips, hold forever. Mining stocks haven't corrected much. Silver, industrial demand from AI data centers. Nuclear is real now. Copper is his highest conviction trade for 2026. Uranium, similar but with tail risk.
The discovery has been known for decades, but newly greatly expanded discovery high in the Andes on the Chile-Argentina border. You all know who I'm talking about, folks, right? These are great, but there's one is 15 years ago and one is we need, according to the experts, we need something like 5 of these every year just to keep up with the projections. And it's not happening. So, and I have basically the same view as regards supply and demand for uranium, the difference being that there are more known and developable uranium resources that can come online at a high enough incentive price, whereas with copper, it just takes too long. Even if the incentive price is there, the permitting and the raising of the capital, and these are multi-billion dollar projects that they just take years and years to move forward. So uranium, I think, is more responsive than copper, but I like them both. And the other difference is, and you haven't asked about uranium yet, I'm just throwing it in there because I think it makes my case for copper. And why copper more than uranium this year? I see them similarly, but the other difference is that there's no copper reactor that can suddenly melt down and cause the whole market to go into a panic. And I don't think that's likely. I don't worry about it on the uranium front, but it is a tail risk that can happen. So my view of both of them on the supply and demand for the near term is similar. Longer term, I'm more bullish on copper, but copper just doesn't have that tail risk of a nuclear accident that uranium does.
Got it. Okay, so I actually wanted to look at uranium. So one thing I noticed here on this chart, I mean, obviously since 2020, it's just been a grind upwards, and then we had a decent sized correction. But here recently, we had this huge spike here, which this was when gold and silver sold off. I mean, it was uranium was spiking upwards.
Actually, if you zoom in, that spike was after. I'm pretty sure that spike was in February, and the gold and silver top was in January. I have for some time been called Darth Silver because I keep pointing out that it has an increasingly important industrial side. And the funny thing is that in the current context, I think that's actually a plus, not a negative. Like, instead of hating on me for pointing out silver's industrial side, we've got all of the factors that are bullish for gold are bullish for silver. And at the same time, like these data centers, I don't have the math on this, but I've heard, and not just from silver bulls, but I've heard on mainstream analysis, like these things take millions of ounces of silver to build out this infrastructure that we're looking at. And to power it, we want more nuclear energy. And you can say, oh, well, renewables and coal and other things. Sure. But we're going to need it all, including nuclear. And the control rods for a conventional nuclear reactor use a lot of silver in them, a lot. We're not talking, a speck in your cell phone. We're talking kilos and kilos here, or kilotons overall. So there is not just someday, somewhen, theoretically, yes, silver is an industrial metal. There is right now a market trend and a deployment of capital that demands a lot of silver. And it's going to demand it whether the Fed increases rates or drops them by 25 basis points and all the kind of shenanigans that move commodities prices around for silly reasons. None of that matters to what's actually happening. Not someday. It's our friend Rick Rule saying, don't confuse the inevitable with the imminent. It's not just inevitable or imminent. It's happening now. So I'm actually quite bullish on silver, and I'm bullish on silver this year, but that doesn't mean that it can't or won't correct more before it goes up. Like we've just seen this historic spike and retreat. And I just think it would be irresponsible for anybody to say, oh, I know for sure this is what's going to happen next. It's going to go straight to the moon from here or straight to hell from here. I wouldn't believe either one of those statements. I think it behooves us, even the most ardent silver bulls, to give it some time. Let's let it settle out a bit. Let's see how the trend shapes up. I agree with all of this analysis, and I agree with the thesis that companies valued in real money, gold and silver, the gold and silver stocks are actually pretty cheap, valued in real money. And it's legitimate to value them in real money because that's what they're producing. So it's the underlying commodity and it's real money. So I get that. But if there's a big scare in the markets, if the AI bubble goes from deflating to exploding, and we have a 2008 scale event, something like that, everything's going to get whacked, including gold and silver, and the stocks will get whacked. And the fact that their margins have expanded so much they can afford a lower price, if gold drops $1,000 in one day, the gold miners will still make a ton of money. But on that day, people will be selling gold stocks left and right. That's my bottom line here. I get the valuation. I understand the question. Yes, I use that all the time in my own analysis of the merits of a company. But I don't kid myself that just because I think this company is strong and can weather the storm, that the baby won't get thrown out with the bathwater in a waterfall event.
Yeah, for sure. Yeah, I definitely could see that, especially with the irrational behavior and emotional behavior, and it all goes back to like investor psychology and so many other factors, right?
Yeah, sorry, just real quick, that's how we make money. If Mr. Market was completely cold, calculated, logical, Mr. Spock, not Dr. Spock, Mr. Spock, right, there'd be a lot less opportunity for us. But it's precisely because he gets so irrationally manic depressive and oversells things, like way objectively below their value, that we can buy low. And then he gets all excited and jumps on the bandwagon, and he gets way irrationally exuberant to the upside. And those swings, those mood swings from Mr. Market, that's how we make money. One is, people get mad at me. They treat me like I'm a trader because I took some profits on the way up. But if you take some profits on the way up, I got to tell you, it helps with that intestinal fortitude and the volatility. Like, as I just need to quote other people besides Rick, but he's so quotable in this context. Like, he talks about having sailed beyond the point of no concern, right? Taken enough profits to still be long, still have upside, but not be able to lose money because you've already taken more money back off the table than you put in. So having done that as well, I mean, what do you do with that money? Well, one, I paid off my mortgage. That doesn't make me a trader to silver and gold. I think that, personally, that makes me a person in the mood to celebrate. But I still have plenty of cash to deploy. So if we get that, 2008 kind of scare, then I will have the cash to act when I see those obvious screaming buys. And by the way, I remember this very clearly in 2008. Less so 2011 and 12, and that was more of a grind. But in 2008, when the markets just went boom, like the elevator just dropped, like the cable was snapped, and people sold gold and silver, not because gold was doing anything wrong, but just because they were hit with liquidity, they had margin calls, and they had to sell whatever they could to satisfy their margin clerks and whatnot. So I remember getting anguished emails from readers back in my Casey days. And the anguish wasn't, oh, you bastard, you told me to buy these stocks and now they're going down. No, that wasn't it. They understood. Our readers, at least, they understood that if not generational, then at least once in a decade buying opportunity was shaping up. And their agony was, I'm all in. Like, I get it. Oh, man, look at these bargains. I want to back up the truck, like Doug Casey says. There's a Doug Casey quote. Back up the truck, right? I want to back up the truck. But it's fully loaded. I have no cash. I'm all in. I can't buy these things. So that's sort of my defense of the idea is buy low, sell high. You can't forget the sell high part. And if you do sell high and it goes even higher, don't have FOMO. Don't have sour grapes. You can't lose is a great thing. And you have cash in case there is a fluctuation and you need it. So I just think you stick to discipline, you don't give in to FOMO, and you come out ahead over time. And this isn't my original idea, but I read an article by somebody recently who pointed out, like, suppose you're a savvy cartel big boss down there, and you got a lot of money. Well, you're not just going to stuff the back room with dollar bills. You're going to invest some of it. So you know something about investing. So what if the people who did this, what if they shorted the stock and then did it? Like, it has nothing to do with ransoms or land use or pollution or any of that. They don't care what happens. They just shorted the stock. It got whacked, and they made a ton of money in the clean, like on the market.
Yeah.
If that, I'm not saying this happened, but just imagine a world where that sort of thing can happen. If that happens, and people catch on to that vibe, as it were, then that could get contagious. So in places where it's possible to do this, like I'm not worried about this happening in Red Lake, Ontario, but I think it's dangerous to say, oh, well, there's less cartel activity where my mining project is. Let's just say the profit motive for criminals in Mexico right now has just suggested a new business model that I think is very high risk for international investors. I will say that there was one time I was in Colombia where my party was surrounded by a bunch of illegals with machetes, very long machetes. And I will say that even I was not at my calmest moment then. It was quite impressive.
Yeah.
And all credit due, the geologist defused it, knew exactly what to say, didn't like promise them all jobs and stuff, just really matter of fact. And here I am, I'm still alive today. But yeah, there's places that I wouldn't take my family. And if I wouldn't take my family there, I really don't want to invest my dollars there.
Yeah. Yeah, for sure. Okay, so pivoting to copper, I believe copper was your metal for 2026. We talked about, AI, data centers, grids, like this initiative to update grids and such. I mean, all of this is going to need a significant amount of copper. We know that the large-scale copper discoveries have been on decline for the last 10 years and such. I'm curious is that like kind of like your main thesis for copper, like these specific factors, or are there some other driving factors for your outlook on copper?
Well, several things. Yeah, I mean, the main thesis is structural supply constraints and deficits going forward. And that's not just me saying it. You look at the various firms that make these projections, they've all got this alligator chart opening, and it's just a degree of, how big the jaws are, how much the separation is between supply and demand going forward. And if you look at those from before the whole AI craze, it was still the same thing. So the AI thing, I think it's real. I think even if the hype simmers down, there is still AI deployment going on. Data centers will still get built, and they need a lot of copper as well as silver. So that's not going away. But that's on top of the already really not unsolvable, but difficult supply and demand situation. So the only two things. One is, I'm not saying copper is going to be the highest performer. I'm not saying that copper will increase in price more than any other metal this year. I'm saying the combination of my confidence in that it is going up and the probability of it going up makes it, in my mind, my most highest conviction trade for this year. I have the highest conviction that it will be significant and that it will be there, as opposed to others that are maybes. Well, I do see the PGMs as purely industrial metals. I don't see them as monetary metals at all or safe haven assets. I mean, imagine a Mad Max scenario where, the computers are all gone and you got to go out there in the world and barter, right? People can recognize gold pretty easily. Silver, if they know what they're doing, they can probably recognize it. Platinum or palladium, it might look like silver to them. If somebody confuses your silver for platinum, they'll give you more for it. If somebody confuses your platinum for silver, they ain't giving you more for it. Mm-hmm. So I just don't see them as safe haven assets at all. They're industrial in my view. And that view caused me to completely miss out on that surge in platinum and palladium last year. I didn't think they would respond as much to gold as silver did. And for a long time, they didn't. It just like at the end when I think what happened was, people are looking at gold over 5,000 and seeing it going vertical and feeling the FOMO and saying, oh, that's great. I want some of that. But 5,000, I can't make myself pay 5,000. I'll buy some platinum instead. Platinum's cheap. So I think they got the PGMs got a Johnny-come-lately tailwind, and I missed that. So the good news is, in the next big blow-off breakout, we now have recent evidence that suggests that people will pile into the PGMs along with the monetary metals in the next blow-off top. So I think that's investable. Like I learned something from this. Like I was wrong. Not wrong that they're industrial, but wrong that investors would ignore them in a gold-silver mania. So next time we have a mania or a manic phase, then I think PGMs are more likely to be in my portfolio to be part of that.